Welcome back into this episode, and in this episode we'll be exploring retail patterns. So I'll just mention like one, but there are different and multiple retail patterns. For example, the bull flag, the bear flag. There's also like the trendline pattern, the head and shoulder. So I'll just be exploring with you the idea behind the retail pattern, which is the trendline pattern. So let us look at this idea to be able to understand what this idea is, and so that at the end of this we'll be able to learn something out of it. So as a reminder, also, I know that there are those who have not been able to use the trendline pattern. So maybe they have had it or not, as a beginner or even as someone who has been trading. I know that many of you or some of you have not heard about some of these retail patterns, but there's just one that we are going to explore to be able to get an idea out of it at the end of this lesson. So for example, the trend line. So retailers use the trend line to be able to identify areas of support or resistance. But yeah, and the idea is that if the market begins to make, for example, we are in a bullish market and the market begins to make higher highs and higher lows, like for example in this price action. So the idea is that a retail trader will come and be able to outline imaginary diagonal lines that seem to support price to make it go higher. So I know, for example, for me, I tried to use this pattern, but it was not making sense. So maybe for you it was not making sense. For example, because when you come to outline, for example, this pattern, the trend line, for example, when you anchor your high, on this low, and on this higher low, you see that like this next one will not touch it. So you'll be left wondering, why has it not hit your trend line, and you want it to hit? Or for example, you also question yourself, where should I anchor my trend line? For example, you can see that this one started from here and continued to, for example, in this way. So you can see that it did not hit this low. So for example, in this pattern, in this trend line, you are left wondering why, or for every retail trader will be left wondering, where should I anchor? The biggest question was, where should I anchor my trend line? Where should I keep this trend line to be able to find support? So another thing, the retail traders would extend this line into the future to be able to attribute support theories to it. And when price hit this extended line, for example, connecting the higher lows, the retail trader will be able to buy from there. For example, this is the line. So for example, later in time, when we come to hit, like for example here, the trader would come and start to buy, aiming towards these highs, which later on would fail on them. So in real sense, is this trend line just an opinion for traders, or does it really make sense in providing support or resistance in case we are looking at a bearish market? So another question one would ask, does price have awareness of these points that we have outlined in the trend line? Simply the answer is no, they don't have awareness that it would come even to that specific line. Another question we can ask ourselves, do banks really associate with the trend line, with this line? So the right answer is no, because how can banks know that you have placed your line there, and also for them to come and place their trend line on the same levels that you have used? So in general sense is that these lines are just used by large funds, by smart money, to be able to trap the large funds, to trap retailers who have either bought or sold at such places in the trend line. Another question that you can ask yourself is, where now how do the market makers capitalize on this this trend line? So we know that, for example, that when this trend line, you use it all for, let me draw another one which will hit also here. So when a trader comes and outline this trend line, when the market comes and hit this place, of course the next idea for the trader will be, for the retail trader, will be to buy from here. But you can see what happens exactly from here, and the obvious place where the trader will place their stop is at this low, at this low. So in short, what the market makers do, they capitalize on these stop losses that have been placed here. So these are just they'll just pair their orders, and you can see that when the market came roaring down, the first place that the market hit as it was roaring down was this obvious low, because there was obvious liquidity here on this low. And also on the next one, the market makers will capitalize on this other low, which, for example, the trader who placed there was using this trend line here. Yes, they entered and maybe they profited for a while, but immediately they were able to go into drawdown, and immediately this top was run out. So what I'm trying to show is some of these, most of these retail patterns, they just are an idea where the market makers use to capitalize to run stops for retail traders. And in the end, as a retail trader, you find that you'll not get the consistency that you are achieving to make. So some of these questions that I've been asking, I hope that even you yourself, you have ever thought of asking yourself those questions, that why should I place my trend line on this low, and why has it not hit this other low here, and instead it went away. So even though, for example, maybe the trader from here, or even from here, I don't know, whichever place, they started making profit, but in the end, you see, there was an immediate drawdown, an immediate movement against the retail trader, or maybe the large funds that use these patterns, these retail patterns. And you see the chart may appear to be bullish, but in fact it is the opposite. So using the trend line, the chart may appear to be bullish, but in fact we are just the market has already reversed. So in short, what I'm trying to say is, when you go through this strategy, you'll be able to learn how not to trade and how not to think like the retail trader. You'll be able to learn a skill set. The ICT concepts are able to teach you a skill set on how you are supposed to profit from the market and have genuine and reasonable areas for support and resistance, areas that you can buy and you can sell, and also reasonable areas you can place your stop loss and see that stop loss holding price. So as you go on into the strategy, you'll be able to learn different ICT patterns, different ICT terminologies and elements that you'll be able to use later on in the strategy. So that's it for this lesson, and thank you for listening.